Yo, 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 yo. How is everybody doing? First things first, I would like to give a huge shout out to shout out to everybody for for liking, for subscribing, for showing love to my first video. I mean, it was a huge success. I never in my wildest dreams imagined my first video would go for over 3,000 views or about 3,000 views. Like I was surprised. Like I just woke up and I saw it like, oh my God, this shit is like, forgive me for cursing. This is about 2.9 or so K views. Like I was truly humbled. I was blessed. I was appreciative. So thank you all so much for showing me love so far. And stay connected with me on social media. My Instagram is in my description. My Snapchat is in my description. I have contacts there, so in case you all have any questions, please feel free to reach out. And don't forget to keep liking and subscribing. So the purpose of this video is to actually tell y'all how to really make money in the foreign exchange market. So the first video I made was just to give you like a kind of intro into what the markets are, how I came across it, the tools I've used, and so on and so forth. But this video is actually going to tell you, okay, how do you actually use this market? How do you leverage this market? That's going to be the purpose of this video. It's a lot of details, but I'm just going to summarize it real quick, and then I'll go into more details part by part in future YouTube videos. So y'all watch out for that. You'll have a notification set up for those too, because I am going to be more consistent dropping videos at least once a week. So with that being said, let's get on to the education. Let's get on to learning, and let's show y'all some money. I need to close this. All right. So in the foreign exchange market, the basic concept of what to do in the market is to buy low and to sell high. Buy low and sell high. So for an example, what we're going to be doing is, let's say the market is coming like this, like, okay, like this. Nope, market is never going to do that. All right. So like this. This is what we call an uptrend. That means the market is going up. So remember how I said we was going to buy low and we was going to sell high. So for an example, and for example, it was at a low point right here. Close that. A low point right here. So we'll come in and we'll buy it up. But how to know when to buy and when to sell is so important. So whenever we are in an uptrend, we are looking to buy. So whenever we're in an uptrend, it means that price is coming from a previous low point and it's trending upwards. And whenever we are in a downtrend, it means that price is coming from a previous high point and trending downwards. So we need to be able to distinguish between those two. Those are two very important distinctions we need to be able to make in the markets. So with that being said, this right here is a definition of an uptrend. So how we know it's an uptrend? Let me get this out. So right here, right here. Right here, just bear with me. I'm going to explain all this. So this is where the market is starting to go up from. This right here is what we like to call a higher high. Text it right there. This is a higher high. And what the market then does is that because whatever goes up has to come down, even if it's just a small little increment. It doesn't always have to be in big waves. So the market created a higher high right here. Then created a higher low down here. When it does this, from this higher low, it comes up and it creates a new higher high. I'm just going to abbreviate it as HH, higher high. And then at this point, y'all could already guess what I'm about to say, makes a new higher low, and so on and so forth. Higher high, higher low, higher high, higher low. So whenever we see this, you see the market making higher highs and higher lows and higher highs and higher lows, it means the market is trending upwards. So whenever you see something like this, you are only looking for buys. Or else you like to trade this little increments, which I would not advise, or else you're a really advanced trader. But this is how it works in an uptrend. This is when you're looking for buys. This is when the market is going up. So let's say you are looking for sells. The market is coming down. So the market is coming down from, let's say, this very same point. And it comes here. Let's say goes up, comes here, goes up one more time, falls down. This is a downtrend. Let me actually add one more. Let me add one more. The market starts trending downwards. This is when the market starts trending downwards. And how we know it's trending downwards is it's making lower highs and lower lows. Lower highs, lower lows, lower highs, lower lows, so on and so forth. That's how we know the market is beginning to trend downwards. And not only that, we also saw this happen. So it broke below the previous higher low. So if you, let's say we were looking at the markets in real life and we saw the market come down like this, and you are not sure if it's going to be like in just a correct, just a move down to create another higher low and then make another higher high. So let's say it does this and then it breaks below the previous higher low, then you know the market is looking to reverse. So in that situation, you're only looking for sells. You're only looking for sells. That's what we call market structure. This right here, uptrends, downtrends, higher lows, lower highs, so on and so forth. It all plays to the larger market structure. You need to understand market structure. And I am going to be going over market structure in future videos, so don't forget to tune into that. I'm going to go into much greater details. Right now, just a general overview of everything. So with that being said, we know that when the market is low, we're looking for buys. When the market is high, we're looking for sells. We have understood higher lows and higher highs. We've understood lower lows and lower highs. So now we're actually going to look at some charts. Let's go to this Euro JPP. Let's go to Euro JPP. Okay, the origin Euro JPP. So this is actually a very nice setup for next week, the start of next week. Like for those of y'all who are watching this right now, this is a very good setup to take at the start of, start of London session on Monday. I don't like trading on, no, sorry, not on Monday, on Sunday, my bad. No, actually, I was right the first time on Monday because the market opens up on Sunday at around 4 or 5 p.m. So I would like to see this touch this line right here, and then from that point on, this is me actually just giving a trade idea right here. So This isn't part of the education, but this is just what I'm seeing right now. I just didn't expect to open the charts up and see this. So I would sell it at least to this body right here. Zoom in a little bit more or a little bit less. I bet. So let me refresh this. Okay, there we go. From this one right here. I would like to sell it to this body right here. Sorry, I said so. I'd like to buy it to that body right there. And this is could potentially be 135 or so pip move, which is amazing. Depending on your lot size, that could be anywhere from $13 to $10,000, depending on your lot size. I mean, I don't know what some people use, so I'm not going to go into that. But this is looking really good for next week. Well, that's not what we're looking at. That's just a little extra gem. So we can see right here. This is a prime example of what I actually just talked about about higher lows and higher highs and all this other stuff. So right here, we can see the market is going up from this point right here. It came up, made a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then market came down. So some people will be like, oh, I'm not sure. Maybe it's just making another higher low to go back up. Or it could come down and it made a higher high. Higher low, higher high, higher low. But what is key? Sorry, lower. I'm sorry, my bad. Lower high, lower low, lower high, lower low. My bad. I'm sorry for mixing it up. So what makes this so key right here is this break of structure. Again, I'll go over market structures. I mean, this is going over market structures, but I'll go into more details in future videos. So I saw this break of structure right here. So now I'm looking for straights. Sells, I am bearish on this. Bearish means sells. I'm looking for sells on this. So now it's coming into my area of interest, coming towards my trend line, and I would like to see this touch this and immediately reject back upwards. That is one trade idea. Or if it does decide to break this line, I'll be looking for a retest of this line and a continuation back downward. So that's another thing that you need to understand when you're trading. The market really doesn't care about you. You are trying to follow the trend of the market. You're trying to trade with the big corporations because this market is moved, number one, by the banks, the big hedge funds, all them people. And number two, by news. We call that fundamental analysis. So you can trade structures all you want to trade, but the market is still going to do whatever the market is going to do. So what you need to understand is how to adjust to that and go with the flow of the market. All right. So this is a trade idea that could potentially happen. So now that we understand higher highs, higher lows, and we actually see it on the charts, ignore all these markings and whatever. This is just these are my trading tools. This is the moving averages. I'll go over this again in the future videos. This right here is the Fibonacci. I should delete that because I'm not using that right now. So I'm going to delete that. Oh, oops. I'm gonna just leave that on there for now. Nope, don't need that. I'll just leave that on there for now. So that being said, we've understood higher lows, we've understood um, higher highs, we've understood lower highs, we've understood lower lows. So we are now, the last thing we are going to look into today is not even going to be on the charts. Last one we're going to look into today is going to be about the mindset of a trader. So whenever you want to start trading, and I keep on telling people this all the time, you can look at structures all you want to look at structures. You can look at charts, you can look at higher lows and higher highs, whatever the case may be, but mindset is the most important thing. because me and you can take the exact same trade and I end up losing mine, but you end up winning yours. Why is that? Number one, because I'm comfortable with what I'm risking. Risk management. That's another topic for another day. I have so much gems for y'all. Y'all better like and subscribe. I have so much gems for y'all coming out in the next couple weeks, months. So, number one is risk management. Let's say I have $100 account and you have $100 account. And the general rule of thumb is you should only risk between 3 to 5%. I mean, I never risk up to 5%. Let's say I risk about 2 or 3% on my account on every given trade. So I'm risking 2 to 3% on my account on $100. So let's say I have a stop loss of, let's say, 25 pips on $100 account with an 0.01 lot size. That's about 0.25 cents. I'm losing cents. Whereas if the trade goes my way for, let's say, 100 pips, I gain $10. You can see how it works. I'm risking 25 cents to gain $10. But let's say you have $100 account, but you are risking way more than you should, and then your stop loss on the exact same thing, instead of 25 cents, is $25. So now it's like, okay, if the trade is going on and you're in a little bit of drawdown, the trade is not exactly going your way, and you're in a little bit of drawdown. Me, I'm relaxed because I don't care. I'm fine losing 25 cents. But you are not okay losing $25 on a $100 account. That's damn near half your account. So you're going to pull out early and miss out on the move, because the market is funny. The second you pull out, immediately it goes your way. Hits all your TPs, and you're just like, oh, I wish I wouldn't have pulled out. But it is what it is because you are not comfortable with what you are risking. That's where it comes to the mindset, the psychology. You can look at charts all you want to look at charts, but if you don't understand truly what it takes to trade, then it's going to be a long road. With that being said, we are concluding this video. Today we talked about higher lows and higher highs. Talked a little bit about risk management. I showed you the charts. I actually gave you a potential trade idea for anybody that may be trading on Sunday or Monday when London opens up. I am going to be dropping a lot more videos going into context about every little thing. I mean, from market structures to indicators to fundamental analysis to risk management to, every little detail I am going to be going over in future videos. So be sure to like and subscribe. I appreciate y'all for hopping on this. Follow me on my social media. I post a whole lot of great content on there. For those of you that may want a private one-on-one, may want more information, I have a Telegram group that I have the link in my social media accounts, in my Instagram account, or you can always feel free to call the number below, schedule a meeting with me, and, we can take it over from there. With that being said, God bless you all. I hope you all have a blessed week, blessed month. Stay safe. Love you all. Peace out.